So first up, we have the CEO of Jervois Global, Bryce Crocker. Bryce is a seasoned mining and natural resources executive with significant experience in base metals, including cobalt and nickel. Bryce joined Xstrata shortly after its IPO in mid-2002. He served in various roles across Xstrata, including VP and Head of Strategy in the Nickel Division, Marketing and Research, GM and Head of Business Development. Bryce was a Director on the Xstrata Nickel Board and Xstrata Nominee Director to the Nickel Institute Board. Following the sale of Xstrata to Glencore in 2013, Bryce was based in Latin America, focused on natural resource investments in the region, before joining Jervois as CEO in 2017.
Thanks very much for the introduction. So, pleasure to be here today. Thank you for the Diggers Committee for the invitation. I'm not used to standing behind the podium, so I'll see how I go. I think just in terms of Jervois, we've been listed on the ASX for 50 years. And I guess what we're looking to create is really a vehicle that's kind of different. So we've all come from large mining companies. Just moving on to the introduction, there's a lot of detail here which I won't really cover off. You'll know many of the names. We've got a couple of founding partners at Glencore. Peter Johnson is our chair, ran WMC's nickel business, then moved on to run Glencore's global nickel assets. And I guess he and I have been assembling what we believe to be one of the strongest management teams that's in a company our size. This is a really exciting space in battery metals, but it's largely a space for tomorrow in terms of the large mining companies. By 2030, the industry is going to be very, very significant, so the likes of our prior employers and BHPs and Rios, Vales, Anglos, they're likely to dominate. But in that interim space, whilst the industry is evolving, we think fortune's going to favour the brave. It's going to favour those that have the capacity, have the training, have the background of running and constructing and commissioning large mines, refineries, etc. And obviously we come with a strong trading bent given our backgrounds. But equally, it's going to favour those that can move nimbly, access capital and grow in a way which commodity markets typically don't. You don't typically get commodity markets growing at 10% compounded per annum for over a decade. When they do, it's with volatility, it's with step changes as we're kind of seeing now, and that's going to be really exciting, and I think that's what we're really looking to create. It's early days, but certainly we've been excited when we kind of were debating about what we were going to do and whether do we do this privately, do we do it publicly. We elected Jervois. The market cap at the time was about $20 million. It's early days, and what we've really created now is a platform. And so by a platform, I guess the underlying basis is geopolitically significant assets. So these are commodities that typically didn't matter historically. I mean, historically, when we think of geopolitics and commodities, we think of oil, you think of gas. That's also going to be, in the future, when you think of this, you're going to think of nickel, you're going to think of cobalt, you're going to think of lithium. These are going to be geopolitically significant commodities as the entire global transportation sector looks to transition. And so there's really three key assets that we currently own. We own the largest cobalt refinery outside of China in Kokkola, Finland. There's a refinery. We own an advanced manufacturing business adjacent to that, and have a tolling contract through the refinery operated by Umicore until 2090-ish. It's the preeminent facility in the cobalt industry. When we were raising funds to buy the business from Freeport for $200 US, I used the example that it's the kind of the Escondida of the cobalt industry. By default, and I guess we know the DRC well through our backgrounds, I don't think you can actually have a tier one asset, a mining asset in the DRC because of that inability to value long-dated cash flows and the optionality associated with our world-class ore body in a country with significant geopolitical instability over the longer term. Kokkola is different. I mean, Kokkola, it really is at the doorstep of Europe. Europe is obviously going to be one of the three key markets in terms of the electrification alongside the United States and China, and having the largest cobalt facility on Europe's doorstep, or as the Finns frequently remind me, within Europe, is really exciting for us. The other two assets, we're building the only cobalt mine in the United States. Cobalt matters for the US, very, very strategic commodity. It mattered before electric vehicles. It's used in aerospace, it's used in defence. The United States hasn't had a cobalt mine for generations. We'll be commissioning that in Q4, end of Q3, Q4. 7th of October, we have an opening ceremony, which again, we're really excited about. And the third asset, where I've just come from, we've recently closed the acquisition of San Miguel Paulista. It's the only nickel cobalt refinery in Latin America, operated for 35 years, 25,000 tonne nickel capacity, 2,000 tonnes of cobalt, was owned and run by a family group called Votorantim Matais. We purchased it recently for 125 million reais, and we're looking to restart that on a tiered basis moving forwards. And again, there's no other electrolytic Class 1 nickel refining capacity within Latin America, and again, it's on the United States doorstep, strategic asset. So geopolitics is going to be important. We're unashamedly, obviously, we're ASX listed. We work with Australian governments, US governments. We believe that what we're doing is important in terms of protecting Western industry in years to come, and certainly the way that we're selling products and supplying and are already a material supplier into US, Japanese and European industry, really important. Just touching on a couple of highlights. Post the bond drawdown, we've got US 110 mil in cash today, net debt of around 90 million US. That excludes finished goods inventory. At Glencore, Trafigura, they actually net finished goods off of net cash. We don't do that here, but you'll see later in the slides, we've got over $100 million of finished goods inventory. We carry between 1,250, 1,500 tonne typically of cobalt. We also secured a $100 million US bond to finance Idaho. So this is a 5-year non-amortising facility. And again, that gives us the runway to finish construction and move into commissioning, as I mentioned. In terms of our shareholder base, didn't touch on that, but when I came back into Australia and we identified who do we want to partner with, we've got Australian Super at 16.5% on the register, Perpetual's there, substantial. Mercuria are also there for about 7%. Mercuria aren't that well known necessarily in Australia. They're one of the world's largest commodity traders, really come from nowhere. Their business model is franchises, kind of trading energy products. They're looking to pivot with the energy transition, and Jervois is part of that story. We've secured a US $150 million credit facility. And again, for the context of those that aren't involved in credit markets, you've obviously seen equity market volatility in the last 2 months. Since the Russian invasion of Ukraine, credit markets significantly dislocated. For a company our size to secure a credit facility, a standby credit facility this large, it's asset-backed, so it's backed by those fixed goods that I referred to, the inventories. But equally, this is something that's really, really important in terms of runway flexibility, and it's essentially structurally a term loan in terms of what it allows us to do with the rest of the group, far, far earlier than a Jervois would ever otherwise be able to access a conventional commercial banking term loan for those debt bankers in the audience. Jervois Finland, 27 US EBITDA in the first half. Recent spot price lowered. We base our guidance on the current prevailing spot price, mark to market. That resulted in current guidance for this year of $35 to $40 million. And we're really excited about the future of cobalt. Obviously, there's a hiccup that's the price is corrected, which I'll touch on recently, just with regard to China and COVID lockdowns. But the reason we're doing what we're doing, and the reason we're doing it in public markets, because there's just simply not going to be enough cobalt. The volume of OEM inquiries, the scale of OEM inquiries is fundamentally different to anything that the cobalt industry has ever experienced. Traditionally, your large cobalt consumer would come and they say that they want 20, 30, 50 tonne a month. OEM 1 comes and they want 200, 300, 500. OEM 2, the same, 3, 4, 5. The numbers are just staggering, and this is something which is kind of quite profound in a commodity which historically was kind of niche and boutique as cobalt historically was before the rise of batteries. And delivering on our objectives, we're building the mine in Idaho, as I mentioned, San Miguel Paulista, and we're also looking to expand, put in our own refining capacity of around 6,000 tonnes of contained cobalt, same as our current tolling contract with Umicore, to really look to dominate that European space moving forwards. So this is the cobalt graph, and I guess the purpose here is just really to articulate that, we're very bullish on the market. The market is strong. We've gone through a short-term correction now with China COVID lockdowns, and that's caused a significant destocking. It's also adjusted the way that we've looked to provide forward earnings guidance, which has created some earnings volatility or share price volatility for us, unfortunately, recently. I guess we're coming to learn why commodity companies don't typically provide earnings guidance, because we chose the spot price to market, and obviously when the spot price changes, that does lead to earnings guidance. Had the price not moved, we'd still be sitting at the same earnings guidance as previously, and the underlying business is really robust. So we look at what's currently happening as an aberration. Certainly the price has stabilised in the last week, and looking forwards, I mean, we're really bullish on cobalt, and that's why we're doing what we're doing, as I mentioned. Just moving on to Jervois, Finland. So it's a significant industrial complex, and there's really, I guess, a pool of assets, if you like. There's a refinery. There's really a refinery that's owned by Umicore. We've got a tolling contract, so we control the units going in. 40% of that access, we control the units going out. So our raw material into our advanced manufacturing business, when many of our peers get up and talk about battery-grade sulfate, that's our raw material. So we're producing very advanced, customised, designed products for particular customers with customised morphology that sell at significant premiums, anywhere from $1 a pound up to $10 a pound or more premium to the underlying price, the underlying index price. The facility, as I said, we purchased from Freeport. We work in conjunction with Umicore, and we have a 6250 is the amount of volume that we currently have access to for the facility. Not forever, but till 2093, which obviously is a significant runway. In terms of the products that we produce, I mean, they're commodities. The underlying product we sell is linked to the commodity price, but they're very tailored. These are quite different products than many of you would be typically used to. They're customised, the barriers to entry are very high. The customer base, when I look at the Treasury report, is kind of the who's who of Global 500 industry. There's leading car companies, there's leading battery companies. We don't sell long term, we sell on an annual contract basis, but certainly the quality and the spread of the book is impressive. In terms of the sales and marketing platform, we split between, we purposely sell to traditional industries. So we generate, the revenue for the last quarter was around $90 million, and again, not many companies our size with that quarterly revenue of that scale. And we sell into the battery industry, what we call the CCC, chemicals, catalysts, ceramics, and also powder metallurgy, which goes into aerospace. We've extended the quarterly sales going back a significant period of time, so you can see that the average in terms of the stability of the business. There's a lot of information here on working capital. I guess the point that we wanted to make here is that the rise in working capital at June, if you look there at the cobalt raw materials, it's not finished goods. What we're looking to do is the material that does come in, it comes in a bulky fashion. The structure of the business is we essentially manage QPs, so there's 500 tonnes of cobalt that comes in each month, 500 that goes out, and we manage the QPs and commercial risk around that. We've purposely chose to increase inventories over the period end on the raw material side to provide ourselves a buffer and protection coming into what we anticipate to be a pickup coming into the second half. Again, a lot of information here. I guess the message that this business is kind of different. You don't see refining businesses like this publicly listed. Simplistically, it's a 10 to 15% EBITDA margin at lower cobalt prices. Typically will range towards the lower end, at higher prices towards the upper end. We are exposed to the cobalt price, so $1 a pound either way leads to about a $2 million per annum EBITDA change. So there's that leverage, but it's leverage in a moderated way. During due diligence, I mean, we look back far further than a decade, the facility's never lost money on a cash basis. So that's something that's pretty significant in our industry across cycles. And the other item that's highlighted there is the spot cobalt price leading to an adjustment in earnings guidance that I focused on. So Jervois USA, I mean, this is really exciting. For those of you that do come past the booth, I mean, we've got some great drone footage. This is something which, when I go to DC, I articulate that if this was a gold, we're spending $100 million, budget's 107.5. If this was a gold mine, nobody outside Idaho would care. But the fact that it's going to be the only cobalt mine in the United States, people outside Idaho really do care. We're going to have leading political representation in both Australia and the United States. We're excited to be at the forefront Obviously, the Critical Minerals cooperation between Australia and the United States and other like-minded countries is important, and we're really pleased to be really at the poster child of that in DC on behalf of Australia, investing into the US and looking to be part of the solution in terms of critical minerals moving forwards. So the progress to site, it's been exciting. So we got the SAG in, ball mills. This is in the context of a mine, for those of you, I mean, this is really small. We're talking 1,200 tonnes per day, very high grade. If you look on the cobalt grade's 0.6 over the life of mine, copper 0.8, 0.5 gram a tonne gold. So it's kind of like a 6-7% nickel mine or an 8% copper mine, probably around the same gram a tonne gold. So thin, it's narrow vein mining, small, but the margins are high. This is the only DRC-like ore body in terms of grade that's outside the DRC, and that's really what underpins. So clearly it's not the DRC in terms of scale. It's not like the Mutundas or Katangas or other projects mines that we've been associated with, but it's in the US and it's going to be very strategic for the country moving forwards. Commissioning end Q3, starting Q4, as I said, with that mine opening. In terms of Jevois, Brazil, so Jevois, Brazil is São Miguel Paulista, as I mentioned. So I just came from a couple of weeks there, just working through with the commercial executives, the technical executives. I'm quite excited by this, really excited, because Brazil, I mean, it's just a big economy. It's a country of 200 million people and an economy that matters. With respect, it's not a country of 20 million and an economy that doesn't. There's more cobalt floating around Brazil at any one point in time. You've probably got 2,000-3,000 tonne of cobalt floating around. We're operating in Sao Paulo. So Sao Paulo, it's the industrial heartland, not only really of Brazil, but also Latin America, 40 million people. And I've spent a lot of time over the years in Brazil, and the country has a structural competitiveness now with the real at 5.5. I mean, the power cost that we're talking about, 2 to 3 cents a kilowatt hour, 100% hydro. And this is exciting because this is the type of opportunity where you can add genuine value. So we undertook a scoping study on behalf of, for the US government essentially, in terms of a new cobalt refinery in the United States. For a 2,000 tonne cobalt refinery, it was going to cost us approximately $200 million for 2,000 tonnes of cobalt. This is 25,000 tonne of nickel, 2,000 tonne of cobalt. We picked it up for 125 million reais, so that's in US dollars, approximately 20 odd. Staggered, we've paid about half of that so far. The other's conditional on milestones with an outside date of June 2023, and the capital to restart this on an initial stage of half nickel capacity, so 10,000 tonnes of nickel capacity, 2,000 cobalt is around $55 million. This is the type of example as to how you add value. Don't blow your brains out on capital, don't take on greenfield risk. This is something that can be reopened. Votorantim kept the facility on excellent care and maintenance, and we're really excited to be moving forwards to restart this. Post-board approval, it'll be a 12-month lead time for first production. Some of the turmoil that I spoke about in markets, which has obviously affected us in the last 6 weeks with regard to China, that's actually helping on the other side. MHP payables down to 60 odd in China, cobalt hydroxide again in the 60s, and so certainly the ability of us to procure raw materials to support the restart is the silver lining in terms of the current predicament that the world faces as a result of some of the ongoing COVID restrictions, rolling COVID restrictions in China. And we're bullish on nickel. So obviously today, Jevois, we're exclusively cobalt sales, but I think if you look at in terms of the chemistry of the batteries, I mean, we're dealing with all the Western OEMs. There is no real ambiguity. I mean, I'm a big believer in LFP. I think LFP is an important technology. It's going to be in terms of a specific use. If it wasn't for LFP, I don't know where cobalt would be trading, because there's certainly not much nickel cathode PCAM or CAM capacity being constructed in China. But certainly for the Western producers, it's almost unambiguously high nickel chemistries. Density, speed, performance, these are all important characteristics that are going to allow the traditional OEMs to take on the likes of Tesla and some of the early incumbents. And so obviously we're excited to be getting back into the nickel space. Most of us associated with Jevois have long pedigrees in the nickel industry. And this particular facility, I mean, we know it well, we've visited a number of times. Many of our executives used to supply raw materials in there. And so we're actively looking to restart the facility. Initially, it'll be on third-party materials, so securing contracts. And it's a similar business model to Kokkola, 10, 15% EBITDA margins, but importantly with that exposure to the nickel side, which if I sit back and look at the landscape in nickel, it's much more difficult for serious institutional investors to get exposure of quality. Norilsk obviously has a line through it now for obvious reasons. Since Xstrata, we took out Falconbridge, Vale took out Inco, Lionor's gone, Jubilee's gone. There's that mid-cap and that ability to create something on that really gives equity markets exposure to something that's nickel and is growing, has a management team that obviously understand the commodity really well. This will be the fourth nickel refinery that the team's operated. They operated Kwinana, Peter Johnson, Michael Rodriguez, who's here with me at Diggers. We obviously had Nickelverk, which unashamedly is the preeminent nickel facility, I believe, globally. And Peter and the team constructed, operated, fixed Murrin in Western Australia. So that certainly gave a company like Voteran Tim confidence in terms of the legacy that they're providing. To be blunt, they didn't want a Yabaloo type scenario. And we have the ability to take over this site, and we've certainly got a team now in Brazil which is really motivated, really excited about moving this facility forwards, as is the Brazilian government. The way I describe it to the Brazilian government is this facility is really the key. If you want a domestic battery industry, if you want a domestic car industry, if you want mines to be opened in your country that would otherwise be uneconomic because they have to export the material to a long way away in intermediate form, then this facility, although we're small in terms of numerical employment, we'll employ 300 people. I mean, obviously headline revenue is $500 million once we're up in operation, associated with the product that we produce, but the actual consequential impact to the country and to Sao Paulo, both city and state, is much more profound than the 300 people around the area that we'll be hiring to restart. And so I guess just to close, we spoke around the balance sheet, extremely strong, the relationship with Mercuria. I mean, lots of inbound interest from OEMs. I mean, what I would say is that it's kind of like a game of musical chairs. And as the number of chairs reduces, the cost of each remaining chair goes up. I mean, when I came in as Jervois, we had a slightly different philosophy than many that get up here. I mean, we're in this for the longer term. It's open register, open offtake. That's kind of the thesis. Now, obviously, we have some very significant shareholders who are very supportive now, but if you genuinely believe that the market is going to go the way that it is in terms of physically tighten in years to come, you don't start locking out that optionality for shareholders now. You wait. Equally, if you look at if we put up a slide with the logos of everyone we sold to, it's kind of the who's who of the global automotive and battery and industry, oil and gas, etc., and many other uses. The cobalt obviously has wide uses outside of the traditional sources, and typically these are higher premium markets. I mean, we're an operating company now as Jervois Finland. It's significantly changed us as a company. It's probably, in the absence of the acquisition from Freeport, it's brought us into production, been an operating company a year earlier than we would have otherwise. That's exciting. That means that we have earnings calls. Obviously adds some pressure, but that's okay. We like to dance. And I guess if we talk around, what I've really been focused on is kind of what can we control and what can't we control. So we can't control commodity prices, but what we've been really focused on is trying to differentiate ourselves as a management team that is different, because the majority of management teams, with respect, they aren't able to deliver on what they say. So that's why I'm so focused on bringing on Idaho, restarting San Miguel, and really setting up Jervois as a vehicle that's kind of differentiated. I mean, I didn't speak about our ownership. We own, as a management team and board, slightly less than 5 on a diluted basis. We put in our significant funds from our own pockets. We believe in the model, and we're really excited about the future. And thank you again for Diggers for the opportunity to present for the first time. Thank you.
Thanks, Bryce. You did a great job staying behind the lectern then. We won't have time for questions, so we'll move along to the next presentation.